Hey all stars, welcome back. You know what? Today we're really going to be talking a lot about the most fundamental part of trading. And if you've guessed it, it is indeed market structure. Now, what I'm going to be doing is to break down market structure so that you fully understand, because one of the key things you've got to understand is that structure is everything. If you don't understand market structure, that means you're trading blindly. You have to understand the structure of the market. It is fundamental. It's really just like learning the grammar of a new language. The grammar is important. With trading, market structure is very important. It's vital for you to understand what the market is doing to be able to capture great moves and make consistent profits. So this video is all about teaching you how market structure works. Now, with that said, let's dive into the intro. Hey all stars, welcome back to All Stars Trading. If you're new to this trading space, I'm Kaale, and this is where I take you on a journey to profitability. So if that's something that you're interested in, make sure you hit that subscribe button. It don't cost you nothing. And don't forget to smash the like button, because if I've been adding any value to you here, I'd love to know. With that said, never be afraid to drop your comments down below so that you can give me insights as to what you want me to cover for the next video. With that said, let's dive right into market structure. So market structure refers to the behavioral pattern of the market. And I want you to consider it like the natural rhythm that the market gives. It is really like price moving in a flow over time. So basically how price moves in trends, ranges, and patterns, that is market structure. So because it's a natural rhythm of the market, every chart, no matter the time frame, has similar structure. Right now, a lot of people will complex it and say, okay, I'm gonna be trading on the 15-minute, or I'm gonna do this, but every time frame has similar structure. That means there are key things that show up on every time frame. Now, I know you're probably familiar with terms like higher highs, higher lows, lower highs, lower lows. This is all market structure. Now I'm gonna put this very simple right here on my little chart. I want you to understand the natural flow that the market gives. Now, when the market is going up, right, it creates a series of higher highs. So we've got one move up and then it pulls back, right? So we've got a move up, then we pull back. Then, of course, we continue and we go a little higher than this one, right? And then we pull back. Then, of course, we keep going. Then we pull back, then we keep going. So this is literally a series of movements, but this is what happens when we're creating an uptrend. If the market is moving up, it gives you great opportunity to take moves based on the structure that it creates. And you have to understand how to identify this structure. Right? So very simple. As a newbie, structure is very important. You have to get this. So once we've created these higher highs, higher lows, so these literally would be your higher highs, and the downside would be your higher lows, because each time we go up, we create a higher low. Okay? Now, I hope you're seeing it with much clarity, but I want you to understand the framework of what we call market structure. Okay, now this is an uptrend. Now, if it is that we're doing a downtrend, right, ideally we'll see that market doing what we call a down move, like so, and then we pull back, then we continue down a little further, pull back, down a little further, and we keep going. So in this case, we are literally having what we call lower highs. So this is a high, then we've got lower highs, and we keep dropping. And then, of course, at the bottom side, you've got lower lows. Okay, lower lows, lower highs. Okay, now the market doesn't move only two ways. Literally, we have the ability to move in ranges. When we range, that means we move sideways. So when we're moving sideways, this is literally often referred to as consolidation, but some people classify it as a range, meaning there's no clear direction. Okay, no clear direction. So that means you're gonna see that we're in a little box like this, and we're not coming outside of it. That is when the market is ranging, right? And I'll get into it on the charts, but I just wanna, give you the dynamics of what it looks like. So recognizing the basic structure helps you determine the trend that the market is currently in. And this would be able to actually give you a critical understanding of making smart decisions when trading. That is literally what you have to identify here. What is price doing? What kind of trend are we in? And how can we capture moves since we are now aware of the structure the market is in, right? So that's literally, the core definition of market structure. We move in three different directions, and the market structure is literally the natural flow of the market based on how price moves, right? It really, considers the trends, the ranges, as well as the patterns that are created based on your candlesticks. Your candlesticks are very important. If you are learning how to trade, I repeat, you must understand this. All right, so now we're gonna get into what we call the phases of the market. And when it comes on to the phases of the market literally moves across three phases. Now I'm gonna be showing you it here on the charts. So pay attention here, and I hope you've got a notepad and a pen nearby to be able to, make notes on this. Now, you want to be able to identify what price is actually doing. Now, even though we understand trends and we understand that the market is ranging, I need you to get this bit. The market goes through three phases, one of which we call accumulation, right? The other one is literally called expansion, and then you have what's called distribution. Now, you're a little bit confused, aren't you? No worries, I'll explain it for you. Now, let me break these down as simple as I can. When we start with accumulation, I want you to think of consolidation. Now, accumulation is literally, when big players like smart money, the big banks, the big institutions with the millions of dollars or pounds that they're dropping in the market, they start buying, right, after a big downtrend. So the market was dropping, and then of course we started to do this, move a little bit sideways. Why are we doing this? Because we're taking our profits. So we've got a huge downtrend, and then after the downtrend we start moving sideways, which means that we're consolidating. This is literally the accumulation phase. And what is happening here in this bit of consolidation after the downtrend is really where the banks are buying quietly, right? They're not plunging big orders here like to move the market massively. They're buying in silence, right? You know what they mean? Move in silence. That's what consolidation is, okay? So what it is, it's literally the calm before the storm. It's the calm before we literally take off. So in this bit, while we have a huge drop and then we're consolidating, ideally here, what is happening here is that the banks are plotting their scheme. Okay, now what comes next? If we've got this as accumulation, where all the buying orders are being accumulated during this consolidation, what we have next is literally our expansion. And this is where we literally break out of the consolidation. We break out of it. So with the breakout here, ideally you're gonna see that price will take its time, and it's gonna move up, and of course it's gonna pull back to sit on top of here, right? And then we'll go a little higher, then we'll come here, and then of course we'll continue to take off. All right. So expansion is really where the trend starts coming in. This is when the trend becomes even clearer than you've ever seen it. This is when it's obvious that we're literally going up or down, right? This is where the real money is being made. And I want you to get this. It's your responsibility to be able to identify this so that you can ride the momentum, so that you can ride the wave and make profits too right here. Okay, so we play with the banks. We do not play with the little fish in the market, which are retail players. We play with the banks because that's where the money is at. So if you understand where the money is at, then go where the money is at, because that's where you're going to make your maximum profits. Okay, so now that we've understood where we've had our accumulation, then we've got our expansion. Now, ideally, you want to understand the other phase, which is distribution. Now, distribution is the opposite. So, what happens here in distribution, it's literally where after we have accumulated, right, this is where the trend is there, it's eminent, it's obvious, we can see it, but then the banks and the other pro traders begin to take their profits, and when they take their profits, we start consolidating again. So ideally, you'll see that we may do a bit of this again here. And you're wondering, what is happening with price? What is happening with price? It's a scheme that they're plotting. And you just have to understand it. Okay? So this is where we're ready for distribution. And distribution is ideally when the big players are now offloading their positions. So they're taking their profits. And usually after the big uptrend, what happens is that price now goes sideways and then it reverses in the opposite direction. I hope you get the clarity here of what I'm showing, because I'm going to get on the charts and show you on the charts, right? But this is literally the three ways, right? The three phases in which market moves. We already understand that we consolidate, we have uptrends, we have downtrends, but do you understand the phases in which we move? Okay, and you have to get this. Okay, so ideally, when you have these phases and you learn to identify them, you're able to trade market structure and make consistent profits within the financial markets. That's the essence of understanding market structure. Okay, so you're not going to be putting yourself in a position to win because you understand structure, right? Now, fundamentally, the key thing here is to be able to identify this on the charts, because you can understand it here from what I have explained, but if you can't pull up a chart and identify where are we accumulating, where's the actual expansion, and where is the distribution, it makes no sense. So your task right now is to make sure that you take this information that I'm giving to you and you're going to go on the charts and do your homework, do your due diligence to be able to identify all of this. Okay? Now let's get into the next section, which we're going to be breaking down all of this on the charts. So let's pull it up. All right, so let's focus on an uptrend. So literally, you can clearly see that we're creating what we call higher highs and higher lows, right? Now let me get my little tool locked in here. And you ideally want to see that we've got price creating a high here, right? So this is a low, and then we create a higher low, and then of course we keep going. We create higher high, higher low. We keep going, higher high, higher low. And you're looking at what we call swing highs and swing lows in this case. All right? We could take it to this point because they're equal. and then that's it. So ideally we're making upward moves, right? Now you can use trend lines to do this. You don't always have to mark them like I do here. I'm just showing you clear structure, right? Because sometimes we're looking at the little bit of moves, but look at where the peak is of that move and where the low is of that move, right? So each time the market makes a high, it pulls back, and once it pulls back, it basically keeps going. Now, if the pattern is not being repeated, right, every time price fails to make a new high and instead make a lower high, that's due to the trend weakening, right? So if we look at this, let me zoom out so that you can clearly see. Okay, now here we dipped below this last low, as you can clearly see. Here we were kind of like equal, but now we're a little bit lower right here. We're on the 4-hour chart, right? But this, you can see that we've dropped a little bit lower than this. And it does show you a lot, but what you have to understand is ideally this bit. We're still in an uptrend, okay? And you have to look oftentimes on the higher time frame, because sometimes you're selling and you're saying, okay, but we're dropping, we're about to go all the way down, are we? Sometimes this is just a pullback to get price shooting even higher, and your Fibonacci levels are able to kind of distinguish that. If you want to get a part of our Fibonacci course, the link is actually down below, because you know that's our go-to, that's our secret sauce that we literally use when it comes on to making insightful moves as well within the market. Okay, so this is a clear uptrend. Now, if you realize that price is failing to break a particular level, so let's say here we're failing to break through and we've broken through here, ideally you could see that we have sold, right? So massive sell here. And of course, we shot back up. Now, structure is something that you have to pay attention to the details of the candlesticks. You have to pay attention to the details to be able to know what it is that we're doing. We literally have created strong resistance at this area here, and of course we dropped massively, quite a few points, before we continued back to the all-time high, right? So ideally you have to pay attention to structure to know when we're gonna have a little switch in the trend, as well as when we're gonna have those major pullbacks. All right, the other go-to is directly your Fibonacci tool. And as I said, if you want to understand how to fully use the Fib, then the course is actually down below. So you can click on that, join the academy, and you'll learn fully how to use the Fibonacci to be able to tell you where price is going and, you know, a lot more stuff. All right, with that said, this is literally what an uptrend looks like. Let's see if we can find a down one to show you. All right, so lovely. Here we've got a downtrend here, and ideally you're seeing that we're creating lower lows and lower highs, right? And we pull back to here and we drop it like it's hot. I like to say that, don't I? And then we pull back. But what do you notice that's happening here, right? We've pulled back to the same area, and we're kind of struggling, aren't we? We're struggling right here. And I'll put a blue line here so you can see. We're struggling, aren't we? So if we're struggling, that's an indication. If you see that we're creating double bottoms, you see that we're creating a strong level of support at this area here, that means we're about to push back up. So we're about to change direction. So you can clearly identify we're in a valid downtrend, but you have to use your eyes to be able to see where these strong levels of supports are being formed, to be able to understand what's about to be your next high probability setup. Okay? I know we can't know everything, and there's nothing that's 100% guaranteed here. Right? Nothing. I just want you to understand the high probability opportunities based on looking at market structure. And now you're seeing we have pushed up, pulled back a little bit here, and then we've continued. Now, ideally, that's a change in direction here, right? This whole level of rejection here, what we call support, ideally, is telling you a lot. And this is all from looking at pure price action, reading the candlesticks, reading market structure. What is price showing you? So support and resistance are core parts of understanding market structure as well. Okay, market structure has many different variables that you have to consider to be able to, make consistent profits. You have to understand structure. I cannot stress it enough. You have to understand structure. All right, I think you get it there. Okay, lovely. All right, so I want you to get two key terminologies here. Now, based on, structure, you have to understand what's called BOS, which is Breakoff Structure, and the other one is what we call CHUK, which is change of character. Now, Breakoff Structure is literally what we use to help us with continuations in an upward trend or a downward trend. So let me show you that bit, which is ideally one of my favorite ways to trade because I'm not a reversal trader. I am a continuation trader. I like Breakoff Structure because that signals continuation for me. All right. So ideally, if price is, like this and we're moving up, right? We're moving up and we pull back. Now, as I said earlier, I use the Fibonacci to help me with these pullbacks to know what to do next. Ideally, it's a core part of my trading strategy. And you can get that full access to our Fibonacci guides within our academy. So go ahead and click the link below to join, and you can have the whole Fibonacci fantasy to be able to get in on the markets. So now with this here, you've got price pushing up, price pulling back. Now, ideally here, you are able to get some moves right here. Now, based on even the Fibonacci that I use, I could get in based on here, based on where the level we are at on the Fibonacci to be able to clock profits come back to here. Or ideally, I could, aim for higher once we've broken above. So we break structure here, right here, ideally, and you see that we're sitting right back on top of it. Nice signal here. So you can use this without fib. If you don't understand fib, no problem. You're just looking for where are we breaking. We've broken. Once we break, we retest, and then we soar. Okay, you can see that. And then, of course, another pullback. Now, as long as that pullback doesn't take out your other one that you had there, then you're still in a valid trend. Okay, and then we're moving. Ideally, we're moving to the upside. Now, as long as we're staying within the parameters and we're not breaking the higher lows that are being formed, we're still bullish. So ideally, you can see where we came back on top of this, because that's how structure works. And, when it comes on to the retracement, the pullbacks, Fibonacci is my go-to. I can't stress that enough because it is really what I use. And I look on the levels of the Fibonacci to know what's, the right move. Okay. But if you're looking at pure price action, just pay attention to structure and you'll see everything here. Now, all of this Breakoff Structure, we continue breaking to go higher. We break and we go higher. We break. So we break the previous highs and we keep going higher. That's Breakoff Structure. And oftentimes when we break, there is a retest to allow you to get in. You just have to wait on it. Okay. Now, ideally here, you're going to see that something fundamental is happening right here. Now, I want you to pay attention to this very carefully. Right here, even though we have pushed up and we've gone a little higher, this is where you're seeing now we're slightly having some challenges. So we've gone all the way up here, pull back, and we're not passing this. Now we're having some challenges. Now, clearly, there is something going on here, which is resistance. Okay, now with your resistance, ideally, Look at this. Let me zoom in so that you can see. Look at price. What a massive bearish candle. Look how juicy this is. I mean, it's so juicy that when we break through here, right, ideally, because we were struggling here. So look at this. This is all price action that I'm showing you, market structure. Strong level of support here. We broke through that thing. And when we broke, look what we did. We pulled back and we continued to drop it like it's hot. So pay attention to market structure. This is a change of character where we're really, doing something different here. We're failing to create a higher high. We're dropping now. Okay, and if you wanted a clear indication, what a better candle to look at than this juicy bearish engulfing candle alongside a little tiny doji. What better candle? Now, you have structure here as well. So listen, your levels are very important. Now let me adjust. Oh, I've doubled it because it's locked in. Let me adjust this right here, because we want to adjust our levels to get as much taps. What did price do? Price broke through that thing and it retested this structure only to continue dropping. So I just want you to understand that structure is everything. You can trade market structure, but you've got to understand it. Okay, you have to understand it. Okay, so we've got a change in direction here. That's really what a change of character is. So you have to pay attention to the details that the candlesticks are giving. What story is it telling? And once you get that, you'll be able to pick up on, your continuation Breakoff structures, as well as your change of character, which indicates a reversal, right, in the opposite direction. Okay, so get those two clear and understand how to come on your charts and identify this. You've got so much homework based on this one video. I've packed this video with so much value. Rewatch it if you must, as many times as you must, because this is the fundamental part of trading that a lot of people don't understand. You have to get market structure. If you don't get market structure, then that's it. You have to get this. This is a necessity when it comes on to trading. All right, so you can trade continuation where we break above higher highs or higher lows and continue the move. Okay, or you can look out for when we're doing what we call those breakoff structures in uptrend, downtrend, as well as or change of characters ideally. All right, okay, with that said, let's get into the next section. I hope you're getting value. If you are, remember, hit that thumbs up and drop a comment that says value down below. Got it? Value. If you're getting some value, drop value down below. Ideally, I'm going to be putting this into perspective so that you fully understand. Now, I'm going to be dropping it into 4 simple steps so you understand how to, trade market structure and be able to do it in a simple framework. So step number 1, we're going to be looking at the 4-hour time frame. Now, when we come to the 4-hour time frame, we're here because we want to understand the clear structure of the market. We want to get the bigger picture. What is the trend that the market is currently in? That is the idea of coming to the 4-hour time frame. So here we can draw trend lines, right? And we can clearly see we're in an uptrend. Remember, when we're drawing our trend lines, our aim is to get as many taps as possible of that trend line, okay? To make it even valid, 2 or more taps. Now, once we've identified the clear trend of the market, you want to be able to understand your levels, your market structure levels. Your levels of support and resistance are very important. Where are we having strong support? Where are we having strong resistance? Now, what makes it strong? The more taps we have at that price point makes it stronger. Okay, 2 or more taps. Ideally, if you get multiple taps there, you can see that, okay, price is really respecting this level. Okay, now with that said, once you've marked your levels, and you can use your horizontal tool to mark your levels, you can do it on your 4-hour time frame coming down to your 1 hour, and then you can look at what it looks like on your 5 minutes if you want to be in and out quicker. Okay, now draw your key levels. It gives you clear perspective. Now, if for me, ideally I've got custom templates here, so if I take out my horizontal tool and I pop it here where we've got a little bit of movement here, broke through here, I could double click on this and I could look on my templates here, and I've got some defaults. So if it's support, it's gonna look like this. All right, so you can customize your templates as well, or customize it by saving it as a particular thing. I identify my 1 hour levels, my daily levels, and I've got weekly high, weekly low, and all those stuff. So I can look on this and be able to identify some levels here. All right, you just have to be able to put text on the screen, and then of course make sure it's visible and put it in whatever color you want to put it in. All right, so that's how you customize a support level. Okay, so that green one, I know it's support. If you want to say, okay, let's put resistance in red, you can do that as well. Okay, but ideally, after you've identified what the trend is that your market is in, look for your key levels of support and resistance. Once you've done that, so that's number 2. Number 3 is, after identifying these levels of support and resistance, you want to watch, you want to sit on your hands, you want to wait for price to come to these levels and see how price reacts. That's literally it. So ideally, if I've got this as a level and I see price coming back to here, and I get some wick rejections, I get some engulfing bullish candles, then ideally that's telling me that price is respecting this level. Okay, if I have a resistance area here, right, and I see that when price comes here, it's rejecting, and I'm getting even the power of 3, I'm getting all those lovely candles, wick rejections, massive wick rejections, and huge engulfing bearish candles, that's telling me a lot. Okay, so you want to be able to pick up on these moves. Now, once you do that, then the final step is, once you see that we are getting a break, because remember, the break can either mean one of two things. We can either have a Breakoff Structure, which is literally possibly a continuation of the trend, or we can literally have a change of character, which is signaling that we're about to change direction. So you're looking out for those as well once price comes to your levels. Okay, and then the final bit is that you're going to be combining this with other confluences, and I'm going to be doing a full video on confluence, so you'll see that video coming up next. All right, so with the confluence bit, it gives you more confirmation to take the trade. That's it. You just want confirmation that, okay, yeah, this is market structure, okay, but what else am I looking at to be able to give me that signal? And you just add those confluences and you're good to go. All right, so that's literally how you look at market structure. We look at the 4-hour, identify the clear trend of the market, and we trade with the trend. Then we can go to our 1-hour, mark our key levels of support and resistance, align those with what's happening on the 5-minute, and then wait for price to come to these key levels. Once price comes to the level, wait on price to react. Once price reacts, then you have the ability to decipher what we're going to be doing based on what the story the candles are giving. Okay, with that said, I just want to drop a few tips here so that you understand all about market structure. And remember, if you're getting value, don't be afraid to smash the like button. All right, so let's talk about this for a few minutes. I'm just going to be pointing out some common mistakes traders need to avoid when it comes on to market structure. Number 1 is literally chasing price without confirmation. We do not chase price. Right? I know you're wanting the money. I know you're wanting everything, but trust the process. Okay? So we do not chase price. We wait for a break-off structure or a change of character, and then of course we can get in based on what price is showing. Don't just jump into a trade without valid confirmation. So we don't chase, we wait. Number 2, forcing structure, where you're telling price where to go, you're telling it when to reverse, you're telling it when to stop going up, when to stop going down, because it's going up too long now, and you're determined to tell it it's time to go down. Don't do it. Stop it. You do not control price. I want you to understand that you do not control price. So don't overlabel what you see, and don't decide where the market is going to go when the market doesn't show you anything in that direction. Okay? So don't impose your bias on the market. My husband would say, don't marry your bias. Don't marry your bias. Okay? I believe one of the clear things as a trader is you have to come to the markets with an open mind, because when you come with a blank slate, you're able to see clearly now what's happening. Yeah, you're able to see with so much more clarity because you don't have an imposed bias. Okay, and the final one is not using context. And you're probably saying, what do I mean like this? Structure means little without context, right? When you combine it with volume, you combine it with your Fibonacci, price action, you combine it with other fundamentals, then it has more context. Okay, so market structure on its own says a lot, but you now need to combine it with other things to create something even more fundamental. Okay, and that's why for me the Fibonacci is my go-to. So you have to find what is the go-to to add as your strong confluence alongside market structure, right? And then here's this bit: patience and precision more than, trying to predict. Remember, patience and precision over prediction. Look at what the market is giving you. What is price indicating? Read into the story and then be patient. Look at how precise the moves are. And of course, create your trap to make profits. But don't you dare predict, because no one knows where the market is going to go in reality. But you can have what we call high probability setups. You can go into these setups and be able to make profits within the market. Just understand that this is a probability game. You win, you lose. You just want to make sure that you're in the highest probability setup to be able to, have a little bit of edge in the markets. Okay? So those are my go-to tips. And you know what? I'm just going to be, helping you to understand that get market structure, go do your homework, And in essence, market structure is very important for you to understand, but you have to be on the charts to understand them. That's the only way. So if you don't spend quality time studying, you're not going to see what I'm even showing you. You have to see it with your own eyes, all right? You have to do the groundwork. And once you do that, you'd be able to excel like all the other top traders that you do know. Okay? So, market structure is the foundation of price action. Learn how to identify your lower highs, your low lows. Learn how to identify your higher highs, your higher lows. Learn how to identify your accumulation phase, your distribution phase, your expansion phase. And always trade in context. Right? Trading context, meaning that you add some confirmation, add some confluences that will boost your confidence, and then back test that. Everything that I give you here, I always say go back test it. It's very important to back test. You have to do your due diligence. I cannot say that enough. Okay? I know you feel me. You get me. Okay? Now, with that said, I hope you have garnered quite a bit of value from this video that I have given to you. And if it is that you really are looking for a mentor to get to the profitability level even quicker, be sure to click the link below and join the All Stars elite traders while we take 2025 to a whole nother financial level. Get in on All Stars Trading, be a part of our family, and come and learn how to use the Fibonacci. With that said, I just want you to understand that you got this. You're only one trade away from becoming the wealthiest version of you. You're only one trade away. So stay on the charts, stay focused, and remember to put God first in everything you do, because if He's in it, without a doubt, you've got to win it. Always put Him first. He comes first, and everything else will begin to flow and follow. With that said, I'll see you in the next video. Bye.